Alright, what is going on, Z community cuties? Shout out to the guy who's cutting grass on a rainy day. I don't know how that makes any sense, but without further ado, what are we talking about in today's video? Is dividend investing a good strategy? Well, let's find out. Alright, so some of the things that we're going to be talking about today are what is dividend investing, why are a lot of people starting to actually gain traction, or why are a lot of people starting to get onto this type of investing strategy, some pros and cons, and then last but not least, concluding if this is a good strategy or not. So dividend investing and dividends, what is it? Let's break this down. Let's just say that you ended up deciding to invest in my pizza business, right? You decided to put whatever amount in, and in return, I promised to give you, let's say, 5% of profits every single month, for example. So let's just say first month I make $1,000. You were promised 5% from the get-go, so hey, guess what? You're making yourself a solid 50 bones. Next month, exact same thing, you get another $50, so on and so forth. You can think of a dividend as the exact same thing, but when it comes down to larger scale companies, usually these dividends are actually offered as incentives for people to continue investing within a specific company or for them to even enter in the first place. For example, if you decided that you wanted to invest in McDonald's, then you would end up getting $1.38 for each and every single share that you own. Now keep in mind that dividends are not always paid every single month. Most of the time they're paid out quarterly, which is every 3 months, every 6 months, which is semi-annually, or once a year annually. This isn't really too common, but it is still a possibility. Now, back when I first made a video about dividends and dividend investing, I don't think a lot of people knew about it, but now that it's gaining a lot more traction, I want to go in more depth with it for you Z community cuties. So what are some pros, what are some cons about dividend investing overall? Alright, so the first pro that pops up into my head about dividends and dividend investing is that it can actually support you with a stable source of income. Now when I say stable, it really just depends on the certain company that you pick. Obviously, don't end up picking some next garbage company because there's a chance that the dividend can either get cut or completely eliminated. Now, one thing to keep in mind with this type of pro is that it really depends on how much money you put up front. Obviously, the more money that you put into an investment, the more money that you're going to get out. And this really also applies to dividends as well. And this is actually where we start touching up on the cons of dividend investing, but I'll touch up on that in just a minute. Another pro about dividend investing and dividends overall is that it can also provide you with an extra bonus or some sort of incentive for you to invest in this company. Let's just say that you were doing some fundamental analysis. You're just trying to figure out what company should I invest in next? While you're doing your research, you end up finding that its financials are looking solid. Its technical analysis, its charts are looking pretty beautiful as well. You end up finding out, whoa, this thing pays the dividend too? It's like a nice little bonus to basically add on to the appreciation of the stock price itself. And the last pro about dividends and dividend investing is compound interest. Now, believe it or not, this is probably one of the biggest applications where I can see compound interest being put into play. Compound interest, if you don't know, is essentially whatever interest that you end up getting back, you reinvest it so that you get interest on your interest. Pretty interesting twist, right? Now, you could do the exact same thing with dividends through something that is called a DRIP or a dividend reinvestment plan. Now, most brokers, I hope, offer this, and off the top of my head, I think every single one of them does. Except for Wealth Simple Trade. Yeah, except for Wealth Simple Trade. But basically, you have to do this on a company by company basis. So you have to go through your broker. There should be an online form or just some sort of a couple of buttons that you need to press. And then boom, you're enrolled in a dividend reinvestment plan. And compound interest can start from as soon as today. Now, the cons of dividends and dividend investing. Now, the first con, dividends can be cut or they can be completely eliminated depending on what's going on with the company. Let's just take, for example, there were a few companies back in the COVID crash that weren't really doing so well and they weren't really holding up. So in order for the companies to actually have more capital to, withstand the harsh times, they ended up having to cut their dividend out completely or reduce it by a certain amount. And this makes complete sense because if you think about it, a dividend in the first place is already the company's profits, but they were just nice enough to split the profits with his shareholders. But in a situation of bad economic times, it makes sense that they'd be like, yo guys, we're going to keep the dividends that we were giving out to you, but instead we're going to try to build a stronger company and that we could withstand these harsh times. So it kind of makes sense, fair game. The same thing can actually apply not only in bad economic situations, but in times where the stock price actually goes all the way down. And obviously I'm not talking about like your 5% losses, your 2.5% losses. I'm talking about like a huge loss. Usually this can happen because of bad earnings or lawsuits or anything, like you name it. But if a stock's price ends up going down super low to the fact where it's like, yo, this is bad, the companies can end up cutting that dividend out or completely eliminating it so that they can, again, withstand a tough time. And this makes sense because when you look at stocks overall in the stock market, shares are essentially ways for companies to raise more capital. The more people that are invested within a company, the more capital that the company can actually say, hey, we've got this much in equity that we've raised in capital or assets or whatever. Now, the last con about dividends and dividend investing is the time and money required for you to actually make this a sustainable source of income. Now, let's think about it like this, right? And it ties back to the drip that we were talking about before. Now, let's just say that you're trying to aim for $50,000 a year solely from dividend income. Now, believe it or not, it's possible. People have done it out there and it's a thing. Now, keep in mind, for you to actually achieve this $50,000 a year, you would have to have $1 million invested within this one stock. And that's just assuming best case scenario, like you found yourself a REIT or an MLP that pays you 5% of a dividend every single year, then you'd have to have $1 million. Now imagine going for a company that only gives you like a 2 to 3% dividend yield. That $1 million is suddenly much higher. So obviously if you don't just have $1 million lying around, or your dad is not willing to give you a small loan of $1 million, this is going to take some time for you to build up to that point. Now, I did some calculations with some realistic numbers because we don't all have $1 million laying down there. So let's just say, and I pulled up the calculations here on my computer, but if you start off with a realistic amount of $20,000 and you put it in a REIT or an MLP that gives you 5% a year. Now in the first year, you would be making around $83 every single month just from dividends. Year 2, we've got $91 a month. Year 4, we have $101 every single month. And by year 30, we have $370 a month. It doesn't really sound that promising, right? But again, the sole base around dividend investing is that the more you put in, the more you're going to get out. And keep in mind, this example is not taking into consideration that you're adding money into your portfolio every year. This is just like set and forget it type of thing. So that's the thing. More money in and consistent contributions. So, putting $100, $200 from your paychecks or whatever into the portfolio will make these numbers a little higher. Now, concluding if this strategy is a good strategy or not when it comes down to like dividends or dividend investing. So this strategy is ultimately best for two types of people. The first type of person is the type of person who's just got a lot of cash laying around and they don't really know what to necessarily do with it. The second type of person is one who's already done their fundamental analysis, their technical analysis, whatever the case may be, and they decide, hey, you know what? This is a dope ass company. Once you've made that decision, it doesn't matter whether they pay a dividend or not, and I feel like it's already a good investment as it is. Now, I'm not sure if I mentioned this, but when it comes down to dividend yields, 1 to 3% would be considered the average for like regular companies, where 4 to 6% is the expected average for MLPs and REITs. Now, dividend yields, for those who don't know, are basically just the amount that the company pays out in a dividend and then divided by whatever the stock price is at the moment. So, for example, if a company pays out a dividend of $1 per share and the stock price is currently at $10, $1 divided by 10 is 10%. That means the dividend yield would be 10%, and I wouldn't invest in that because that's way too high. But you get what I mean. Now, me personally, I don't want to sound too cocky, but I feel like I've kind of mastered the art of dividend investing. It's just that as of right now, I don't have loathsome amounts of cash that I could just put into a dividend stock and lock away for the next few years. But I do have a crazy looking spreadsheet that's very simple, very easy to follow, that can track your dividend journey. I haven't posted this online yet, but if you're interested in something like this, honestly, go onto our website, azizzfinance.ca, and then sign up to be an official Z community member. You'll be the first person to know once these spreadsheets actually launch to the public, and you can get the inside scoop firsthand. Now, Z Community Cuties, know if you have any questions in the description below. And as again, thank you for listening. It's your boy Azizz Finance, signing out. Peace.